Okay, so today I'm going to be going over supply and demand. In the next couple minutes, I'm going to show you and tell you pretty much everything I know about supply and demand, how I identify these levels, how I define supply and demand, and also how I actually implement it into my trading on a daily basis. Supply and demand is the most important tool you can have as a trader within your toolkit. It basically encapsulates price action. It is more important than any other indicator or pattern you have in the chart. It basically is going through a chart and looking for where buyers or sellers might be sitting. And this is going to be critical. Okay. So I just want to preface this with one more thing. Okay. Supply and demand can be used on any time frame, on the daily, the 4 hour, the hourly, the 15 minute, and the 5 minute. It can be used pretty much anywhere. It can be used for long-term investors, for scalpers, for day traders, for swing traders. It doesn't matter what time frame or setup you're looking at, it works. Okay, a strong demand zone is a strong demand zone. Okay, a strong supply zone is also a strong supply zone. So basically, how I would define supply and demand is really, as I said before, where buyers are sitting at as a demand and where sellers are sitting at as supply. So instead of giving you, basic boring terminology, I'm going to show you how I actually do it and look for it, or identify it rather, on a chart. And we're going to be using Meta as a very, very, very key case example. And before I do that, I want to make one very boring and kind of sad example here on just using a line, right? Just to show you what I look for when charting supply and demand as a sort of template, right? As opposed to just using the chart, we're going to use this sort of as a template. So here you're going to see on this random ticker, let's just call it ABC, we have consolidation between this level, right? We have buyers showing strength and sellers taking over, and buyers showing strength and sellers taking over. This sort of zone or consolidation created a balance, right? The price is balanced here. Buyers and sellers are sort of balancing the zone into one sort of key area. And the key area was broken out of by an aggressive move up. Now, what is this going to make this little zone? Well, this little zone is now going to have pending buy orders, right? Pending orders that were once sort of sitting here on level 2 that are now still going to be there on the next retest, right? So when the stock comes back down and tests this level, you're going to have many of these same pending buy orders sitting there, right? These pending buy orders sitting there might result in a short-term pop up. So one thing that I do, besides just saying that supply and demand is a, rather than a zone, it's going to be a line, I also take that one step further and say supply and demand is really looking for those aggressive moves up and aggressive moves down. Because what does that do? That leaves pending orders sitting there on the book. So the next time we retest that level, whether it's a day from now, a week from now, a month from now, a week from now, you're going to have many of those same pending orders sitting there. And I'm going to show you a very, very interesting ticker here, Meta. And I really love this level. Now, if you take a couple of seconds, pause this video, and maybe just jump and see where would you identify demand on a stock like this, right? You can notice a lot of sort of bounces off this 157, 155 level on Meta, right? I'm seeing it 1, 2, 3, 4, and now we're approaching the 5th time on Meta. Now, this move is not just a regular support because we're seeing very aggressive moves off of it. I think this is more than just a regular support line that I would draw haphazardly. I'm going to draw a demand zone here because of the aggressive moves. And I think that's most important. You can have a demand zone even if it's not an aggressive move, but it's going to be an even stronger demand zone if you do have that aggressive move. And this is very critical to being an intraday trader, okay? So what we're going to do here is we're going to look for the first move up. The first move up, the first aggressive move up sort of happened right here on June 23rd. So let's draw the box starting on June 23rd. And what I usually like to do is I look for that first aggressive move up, but I'll go one candle back and I will encapsulate the entire candle previous to the breakout or aggressive move up. So I'm going to show you here on Meta. This would be the zone between 158 down to 155. Now, some people, what they like to do is they will go into the chart and they will say, they will look at the previous candle, they'll encapsulate the previous candle, and they'll compare it to historical price action. So let's look here. And in this case, you might want to refine your demand zone a little bit better and just incorporate the body of this candle. Now, why are you doing that? Well, you're doing that because you see the top wick on the June 22nd candle sort of confirming that this level is even more refined than this larger demand zone. So in this case, you might decide to lower it here and raise it to just about this level here. So you're just encapsulating the body. In some cases, you could be using the whole candle, including the wicks. It just depends on the previous price action and what sort of fits that overall movement, okay? So now what we're gonna do, after we've drawn this demand zone, this little box, using a little rectangle here in TradingView, we're gonna draw over the whole entire box using that same level. And we're gonna see how the stock has interacted with it. You can see here, this is a very, very nice demand zone, okay? It is defined, it is very respected. Not only is it defined and respected, it is also an aggressive move off each time, indicating that the buyers sitting here are very, very strong, okay? The only sign of weakness that we've had so far was not the first, not the second, not the third, but this fourth touch. We ended up chopping around in the zone for a little bit longer. So if you were trading this fourth touch here, you might have been a little bit concerned that it's already kind of lost steam and might be breaking through. But even so, it's held, right? Even so, it's held. And that is how I would draw a demand zone here on Meta. Now, before I show you how I would have traded this, I want to draw a supply zone. So definitely pause the video right now and see if you can identify a few supply zones on Meta. And I do want to say this, there's always going to be multiple supply zones. There's always going to be multiple demand zones. It's looking for the area that has the most respected price action, which is going to be your strongest and most notable and important demand zones or supply zones. So let's look at this level on Meta. Here, I'm seeing a sharp move down, right? I'm seeing a sharp move down. Now you can draw a few different supply zones here. You can draw a supply zone starting using this candle, which would be from here to here, and drawing a little box over. This level is not relevant. It is not relevant. Although we had that aggressive move down, likely pending sell orders sitting here, it is not really relevant. And also, to top that off, it's important price action, right? We could see the multiple wicks off of it. But it's not relevant because we sort of haven't really been in that area in a long time. So I'm not going to include this supply zone. What I'm going to do is actually include another supply zone that I see here, which appears to be even more relevant to the chart and what we're trading at right now. Look at this aggressive move down. So I'm going to draw a supply zone, start a little box starting from the top of the wick to the bottom of the wick. In this case, you might even decide to lower the wick down to the 183.7 level because you see this price action here. So I'm going to do that. I'm going to draw the top of the box using these wicks over here, and I'm going to draw the bottom of the box using these candles over here. Now I'm going to label this box red, just so I know it's supply. There's no real reason to be doing this. It just sort of looks better on the chart. Then I'm going to draw the zone over, and we're going to see how the stock has interacted with this level, right? Zoom out a little bit better, and let's see what the stock has done off of this level here, okay? And you can easily see that we've rejected off of this, not just once. This was the first potential play you could have taken it, but it also happened a second time here in early August, right? This is a very clean supply zone on Meta that is actually still very much so intact, and probably, in my opinion, even stronger than this demand zone. Even though this demand zone is strong and is bouncing off of it, this sort of consolidation here shows that it might be sort of beginning to weaken. And we're going to talk about that in a second. But I want to show you now how I would actually trade this. I think, okay, very cool, very cool. You can identify supply and demand on a chart. How the hell would you actually trade it? Okay, so let's show you. So here, if you had drawn the demand zone here, right? You would have seen that we bounced off of it once. You could have longed it literally into the zone. How I would have taken this trade, I would have bought calls or bought equity into the top of the zone and maintained a stop slightly below the bottom of this channel, right? Which would have been around 154.8 to 155, right? Using this previous candle, okay? And I think an even better way to take a trade like this, if you're not confident taking sort of long-term balances on, so you're not confident with this level yet, if it hasn't really been sort of defined enough, what you could do is you could draw a trend line and take the trend line break, okay? So what we're seeing here is we're seeing a trend line off this demand. So we have a downward trend line into this demand zone, and you might be wary of taking this trade because you're fighting the momentum. So what do? You wait for it to bounce first, you wait for the actual bounce to occur and buyers to step up and wait for the breakout, right? You take the break of this 4-hour trend line or hourly trend line, okay? You could even go on the hourly time frame and confirm these levels. It even looks better on the hourly, right? Now, let's jump to the 4-hour. Again, and look where you could have taken it a second, a third, and possibly even a fourth time. Again, you could have taken the break of the downtrend here after bouncing off demand the second time. You also could have, at this point, saw that we wicked off of it once, this 155 level. It's also a key psychological level, and said, you know what, because it's, it was defined as a demand zone here, respected as a demand zone the second time, now it's a seriously defined zone, I'm gonna long it a third time off of this level. You could have started entering at 156.7 for a potential swing, and you could have scaled all the way in down to 155 and maintained a stop below literally 155, which is the bottom of the demand zone. Or, as mentioned before, could have taken the break of the downward trend. Again, break of the downward trend. Look at this. If you're wary of taking bounces like this, you could literally just wait for the stock to bounce off demand and break this sort of downward trend line, right? That is how I would take it. Now we're approaching this level again. This is another key level to be watching on Meta. Now, I did say something before about being wary because of the consolidation we've had in this zone. I want to talk a little bit about that. So let's just say theoretically we have 100,000 orders, buy orders sitting here initially, right? We have 100,000 buy orders sitting here. Why am I saying that? Why am I making this little hypothetical example? Well, because of this aggressive move up, we're going to have those pending orders. It's inevitable. You're going to have retail traders, institutional traders who have those pending limit orders sitting on the books. They are not canceled just yet. And next time we retest that level, they are going to be filled. So because of this, we retested it again a second time. We might have, let's just say 25,000 orders filled. So the second time we're retesting this level, we're going to have only 75,000 shares waiting there. And a third time, it might be 50,000 shares, right? And this fourth time, it might only be 25,000 shares. And I just want to draw this here again, so you can sort of visually see that the aggression is still there, but it might be diminishing over time. So the more and more times a stock retests this demand zone, right, it's going to be eating away at some of those buyers that are sitting there. And that's going to make ultimately the demand zone weaker and weaker, okay? So although it was still aggressive, it is getting weaker and weaker. Is this a trade I would take on Meta? Yes, it is something I would still take. Why would I take it? Because it is such a very, very well defined risk reward. I enter at the top of this demand zone and I stop out below the bottom of this demand zone. Now, when I say this, that might seem very oversimplified. You can add other levels into this. You can add Fibonacci retracements or the 200 MA or some other key level on the chart to make this demand zone even stronger for a potential bounce. But I just want to sort of tell you how I would take it just using supply and demand. Now, I don't want to just focus on the demand side. I want to also focus on the supply side. Let's look at this supply on Meta and see how we could have taken it. Okay, so on Meta, we saw that this was a defined supply zone after we made this move down. We have pending sell orders here. We consolidated in the zone, bounced off demand, bounced off demand, bounced off demand, retested this supply zone. You could have taken it short here, entered at 183.5, and stopped out above this 185.4 level. Now, let's just say you were sort of worried about taking this supply zone rejection, okay? What you could have done, the same thing what we did with on the long side when taking the bounce off demand, you could have seen that we had a very well-defined trend to the upside. This trend to the upside, right, this little trend line to the upside, we could have waited for the stock to reject off of it and break below this trend line as an area where momentum to the downside might be increasing. So it's confirming the move to the downside. So I just want to show you there are multiple ways to take a supply or demand zone rejection or bounce, okay? Now, on this most recent retest of Meta, you should have felt a lot more confident taking this 183, 184 to 185 reject because we rejected off of it once already. This was a very aggressive move down off this level. Therefore, we're probably going to have pending orders sitting here to bring the stock down when we retest it a second time. Okay. Now the same concept holds true here. If we have, 100,000 orders, sell orders or asks sitting at this level here, we might only have 75,000 sell orders sitting here. On the third and fourth and fifth retest, it could be less and less and less. And that is why you see breakouts. So another key aspect I hope you should all sort of include into your trading strategy is gauging momentum into these key levels. Now that's a totally separate topic, but I just wanted to show you how to actually identify supply and demand on the chart and how I would take them just using supply and demand and just using price action. I'm not using indicators here. I'm just looking at supply and demand, right? And what you're going to want to do as a trader is you're going to want to throw in those other relevant charting techniques to confirm these levels, right? To confirm these supply and demand levels so you can actually take trades more confidently, right? I'm going to go over one more example for you all, and I'm going to sort of iron in what supply and demand really means. So let's hop over to the next one. Okay, so the next level we're going to be going through is this A and B level. Okay, so the first thing I want to say is if you're practicing supply and demand and actually learning how to identify it yourself, take a few seconds to pause this video, then you can go see and see kind of how I drew the demand zone on this particular chart. Okay, so on a larger time frame on AMD, what you'll see is that we have an aggressive move up followed by consolidation. So when I'm charting the demand zone, I'm looking for two things. The two things I'm looking for are going to be either one, a well-respected level, and two, aggressive moves, right? Aggressive moves which leave those pending buy orders sitting there on level 2, okay? So let's hop over here and see where the aggressive moves are. Well, there are many aggressive moves here, but let's look for the notable ones, okay? So I'm seeing aggression here in this area. I'm seeing aggression here in this area. And most importantly, I'm seeing a move off of this area here, okay? And also here as well. So what I'm gonna do is I'm gonna remove all those circles I just drew, and then I'm going to draw this actual box. I'm gonna draw a rectangle using the previous candle, which is here, using the high of this candle. And I'm gonna draw this zone. Now you might be asking, why am I drawing the zone starting here? Well, in this particular case, this was a supply zone initially, right? That broke above, actually rejected first, slammed through it, and now held it as support, creating a demand zone. And this is something you should all be very, very aware of, right? Even though supply and demand can be very strong, right? You did see how we did have this rejection off of this supply level. We did ultimately have enough strength to break through it. And because we broke through it, held it as support, we now have turned this supply zone into demand, okay? So I'm going to change this entire zone to green, and I'm going to see how this zone fits into price action now, right? You'd see here that it's held it over here once, twice here again, 3 times here again, even though this was a little bit of a wonky candle, but this was because of earnings. And then a 4th and 5th time here as well. And now we're entering it with this aggressive move down on the 6th time. And we're coming in with some pretty high aggression, but this is still a demand zone nonetheless, right? Now you might be asking, if we break this demand zone, where is the next demand zone, right? Well, the next demand zone is going to be the other aggressive candle. The other aggressive candle I'm seeing is going to be this move up here. So we have an aggression followed by the previous candle. So I'm going to draw the high and low, and I'm going to see how actually how this fits into the previous price action, and it fits in really beautifully. So I really love this 85 level on AMD. So I'm going to draw over this level, and I'm going to mark this as potential demand on AMD. So that is how I would chart demand zones on AMD. We have two different ones, the two most relevant ones I see in the 4-hour. We can also go to the hourly to refine these levels and get them perfect. You can see here, fixing them nicely, encapsulating the top of the wicks, encapsulating the bodies if it's more relevant than the actual wick itself, and creating sort of a nice area where we can consider longing AMD or buying calls or buying equity. Okay, so this was the last example I wanted to show you guys. Hopefully this helped you all. If you have questions, please feel free to let me know. I'm happy to answer it. I know this was a longer and probably pretty boring video, but supply and demand is the most important thing. I think, in my opinion, is the most important thing. So study it, practice it, learn it, and good luck.